Hey everyone, welcome back to Corporate Decoder, the place where we uncover the truth behind financial filings. Maybe we will find some hidden dirt or some surprisingly good performance. Their latest filing is from Two Hands Corporation. And while the title Two Hands Corporation might sound friendly, the numbers inside tell a more complex story. This is their quarterly report for the period ending the 30th of September 2025, and like most quarterly reports, it gives us a snapshot of how the company is doing financially. It includes their balance sheets, which is like a company's financial picture on a specific day, their income statements, which show how much money they made and lost over a period, and their cash flow statements, which track money coming in and going out. Let us dive straight into the most crucial part, the financials. Looking at their balance sheet as of the 30th of September 2025, we see they have total assets of about $48,000. That sounds small, but it is actually a big drop from the nearly $98,000 they had at the end of 2024. Their cash on hand is about $9,000, which is up from about $2,000 last year. Now, liabilities are what the company owes to others on the liability side. Things are less rosy. Their total current liabilities are over $3 million. This is a lot compared to their assets, and it means they owe significantly more than what they own outright. This next number is really important. The accumulated deficit is $95 million. That is a massive hole the company has been digging. Since it started, this shows they have been losing money consistently over a long period. Now let's look at their income statement for the 9 months ended the 30th of September 2025. They report zero sales. This means no money was made from selling anything during this period last year. For the same period, they had sales of over $500,000. With zero sales, their gross profit is also zero last year. It was over $80,000. This is a stark indicator of their current business activity or lack thereof. Their net loss for the 9 months ending the 30th of September 2025 is over $1 million. This is an improvement from the more than $1.6 million loss they had in the same period of 2024, but it still represents a significant loss. Something else to note is the number of shares outstanding. It has gone up significantly. This often happens when a company issues more stock to raise money or to pay off debt, which can dilute the value of existing shares. The cash flow statement tells us where the cash came from and where it went for the 9 months ended the 30th of September 2025. They used almost $500,000 in operating activities. This is more cash outflow than last year. On the financing side, they received about $500,000 in cash. This is from various sources like advances and issuing promissory notes. They ended the period with just over $9,000 in cash. This is a very tight cash position and raises serious questions about their ability to continue operating without more funding. The company has gone through several business changes. They used to have applications for parenting and a grocery delivery service called Go-Kart City. They sold off parts of their grocery business in May 2024 and are now focusing more broadly. They are exploring opportunities in digital assets, fintech, and the gig economy. They also mentioned trying to reinvigorate their legacy food business with new leadership. This section is critical when a company is preparing its financials. It has to consider if it can continue to operate in the future. If there is substantial doubt about its ability to continue as a going concern, it must be disclosed. Two Hands Corporation states that their financial results raise substantial doubt about their ability to continue as a going concern. For the next year, they are relying heavily on raising more capital through selling stock or getting loans. This note details a convertible debt agreement with someone named Jordan Turk, which was later assigned to Emil Senator, the chief executive officer of the company. This note has some quirky terms like increasing the face amount by 20% if not paid on time, and the lender can secure company assets. This describes a credit facility agreement with the Cellular Connection Ltd. The company converted a significant amount of this line of credit into shares of common stock, which was a major financial move. They have outstanding promissory notes totaling over $1.8 million. These notes bear interest and are due at the end of 2025. There have been several instances of converting these notes into company stock. This relates to a convertible note with 1800 Diagonal Lending LLC. The note has a variable conversion price based on the stock price and has a discount and transaction costs associated with it. This section details the changes in their stock over different periods. We see a lot of stock issuances primarily from settling debt with equity. This means they are giving away ownership in the company to pay off debts. It shows significant dilution for existing shareholders. These are things that happened after the 30th of September 2025, but before the report was finalized, a convertible note holder converted a large amount of debt into shares. and they entered into a new securities purchase agreement for another convertible note. This is where management talks about their strategy and outlook. They plan to reinvigorate their food service division and explore new areas like digital assets and fintech. This part is important. It shows that the company acknowledges its disclosure controls and procedures were not effective. They point to issues like inadequate segregation of duties and insufficient written policies management plans to fix these weaknesses, but it depends on securing more financing. As of the 13th of November 2025, there were over 6.3 billion shares of common stock outstanding. This is a very large number and reinforces the dilution we saw earlier. So wrapping up, Two Hands Corporation is in a precarious financial situation. They have significant accumulated deficits, zero sales in the latest reported quarter, and rely heavy on external financing for survival. Their strategy involves pivoting to new industries and trying to revitalize existing ones. But the immediate challenge is survival, given their cash position and ongoing losses. The constant issuance of stock to settle debts is concerning as it dilutes existing shareholders. Significantly, what does this mean for the future? Well, the company acknowledges substantial doubt about its ability to continue as a going concern. This means without new funding, they might not be around in a year. They will need to find a way to generate revenue quickly or secure substantial investment to overcome their massive deficit and keep the lights on. Alright, that is our breakdown of Two Hands Corporation. This latest filing, what is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description for more great content and discussions. Thanks for watching. See you next time.